Hi, it's Peter Schiff. This is Monday, January 21st, 2010. Well, today Barack Obama announced in a press conference that I happened to catch.
This economic crisis began as a financial crisis when banks and financial institutions took huge, reckless risks in pursuit of quick profits and massive bonuses. To avoid this calamity, the American people, who were already struggling in their own right, were forced to rescue financial firms facing crises largely of their own creation. And that rescue, undertaken by the previous administration, was deeply offensive, but it was a necessary thing to do. And it succeeded in stabilizing the financial system and helping to avert that depression. We have to enact common sense reforms that will protect American taxpayers and the American economy from future crises as well. For while the financial system is far stronger today than it was 1 year ago, it's still operating under the same rules that led to its near collapse. That's why we are seeking reforms to protect consumers. We intend to close loopholes that allowed big financial firms to trade risky financial products like credit default swaps and other derivatives without oversight, to identify system-wide risks that could cause a meltdown, to strengthen capital and liquidity requirements to make the system more stable, and to ensure that the failure of any large firm does not take the entire economy down with it. Never again will the American taxpayer be held hostage by a bank that is too big to fail. I'm proposing a simple and common sense reform, which we're calling the Volcker Rule, after this tall guy behind me. Banks will no longer be allowed to own, invest, or sponsor hedge funds, private equity funds, or proprietary trading operations for their own profit, unrelated to serving their customers. My message to leaders of the financial industry is to work with us and not against us on needed reforms. I welcome constructive input from folks in the financial sector, but what we've seen so far in recent weeks is an army of industry lobbyists from Wall Street descending on Capitol Hill to try and block basic and common sense rules of the road that would protect our economy and the American people. So, if these folks want a fight, it's a fight I'm ready to have.
That he was going to be introducing new regulation into the banking industry to try to separate some of the risky proprietary trading, the hedge funds, the private equity deals being done by banks that are also working with insured deposits. And the regulation is meant to try to prevent banks from taking too much risk with those insured deposits. Now, the president got a number of things wrong when he announced this program. First of all, he said that the economic crisis, the financial crisis, was caused by greedy bankers who were trying to make a quick buck, and that these regulations will prevent the next crisis. Well, once again, the president is wrong. That isn't what caused the crisis. The crisis basically caused bankers to be able to act on their greed because of what the government did. What he is describing is one of the symptoms of what the real crisis was. The crisis was that the Federal Reserve irresponsibly lowered interest rates to 1%. The crisis was that Fannie Mae and Freddie Mac were guaranteeing mortgages that individuals couldn't repay. The crisis was everything that the government did to interfere with the free market that created the real estate bubble, that made the collapse inevitable, and that made possible all the rampant speculation on Wall Street and on Main Street. And the president is doing nothing to address the underlying cause of the financial crisis. The Federal Reserve is acting more irresponsibly than ever. The government is intruding into the free market more than ever. The government is even more involved in the housing market. The government is providing bigger moral hazards, not only to the housing market, but to the financial industry with all their bailouts and the idea that firms are too big to fail. So the underlying causes of the financial crisis are intact. And so not only is Barack Obama not protecting or preventing the next crisis, he's ensuring the next crisis, and he's ensuring that it will be even greater than the previous one. But let's actually look at what the president is attempting to do, because in a way, he's on the right track, but not totally. The president is very right to be concerned about the risks that banks take with insured deposits. But the problem is not that they're taking risks. The problem is that those deposits were insured in the first place. You see, the reason that banks can be so reckless with the money that they have on deposit is because the depositors don't care. They don't care what kind of risks the banks take because the government has already told them that their deposits are guaranteed. So who cares what the banks do? Now, if the government hadn't insured those deposits, the banks couldn't take all these risks because their depositors wouldn't allow it. They'd withdraw their money. So because the government came in and interfered with the free market by insuring bank deposits, it created a moral hazard for both the depositors and the deposit-taking institutions. And so now we need government regulation to undo the damage caused by government regulation. So this is not a free market problem. This is a problem that never would have existed in the free market. It only existed because the government came in and prevented the free market from working and created a moral hazard. So we do need to do things. But you know, the whole crazy thing about this is it was the government that convinced many of these firms to become banks. Goldman Sachs wasn't a bank until it converted to be a bank. Why did it become a bank? Because so it can get money from the Fed, so it can borrow from the discount window. So here you had a company that had no insured deposits that only has them now because they wanted to get bailed out. Now, of course, a company like Goldman Sachs might be able to go back to become an investment bank and no longer be a bank, right? And then, of course, when it gets into trouble again, it'll just do the same thing so it can get bailed out. You remember you had the same situation with Bank of America that now bought out Merrill Lynch and now all of a sudden put all those deposits at risk because Bank of America took on all the liabilities of Merrill Lynch at the urging of the government, almost at gunpoint. That shotgun marriage was arranged. Now here you have the government saying we don't want them to do what they created in the first place. I mean, the whole thing is ridiculous. Yes, we do need some regulation on banks because the government removed market regulation. But what the government is doing is not the right way to go about it. There are much better ways to go about it. Of course, we would never have been in this mess had we not insured those bank deposits in the first place. But of course, much of the losses were not in those insured institutions. These losses happened outside those institutions. They happened in Freddie Mae and Fannie Mac, and they happened in financial institutions that were not operating with government guarantees. The principal cause of the problem and what remains unaddressed was the reckless monetary policy of the Federal Reserve that are even more reckless now, and the moral hazards created by government, by subsidies, by guarantees. And those subsidies, those guarantees are even bigger now. So the moral hazards are bigger. So again, Barack Obama has ensured that the next financial crisis will be even greater than the last. And of course, when he said that our financial system is more solvent now than it was a year ago, again, he's got it wrong. It's not more solvent. It's less solvent. It's on government life support right now because the Federal Reserve is keeping interest rates artificially low and has all the toxic assets on its balance sheet instead of on the bank's balance sheet where they should be. The minute this Fed stimulus is removed, the minute interest rates rise, the minute the Fed tries to unwind these positions, all these banks are going to fail again. And they're going to have even bigger losses than the last time.